Okay, good morning everyone. We have just completed a sound check with a few people who logged on early, so let's get started then. We have designed today's webinar to give you an understanding of how PAYE Modernisation will affect your business and what impact it will have on running your payroll. PAYE Modernisation will involve the most significant reform of the PAYE system since its introduction in 1960. Employers will need to calculate and report their employees' pay and deductions as they are being paid. This will make it easier for revenue, employers and employees to ensure that the right tax is deducted and paid at the right time. We have three speakers presenting today's webinar. First up, we have our main speaker, Paul Byrne, who is the Managing Director here at Thesaurus Software. After qualifying as a chartered accountant, Paul went on to set up and manage his own accountancy practice. Paul co-founded Thesaurus Software in 1991 with the goal of providing payroll software to Irish businesses. Thesaurus Software now provides quality software products and excellent customer service to over 100,000 businesses across the UK and Ireland. Next up, I'm delighted to welcome Sandra Clark, who is a partner at BCC Accountants and a council member of the Irish Tax Institute. Sandra is on the front line when it comes to helping her clients through the new PAYE modernisation changes. Sandra will be joining us for the questions and answers section. Welcome, Sandra. We are delighted to welcome our next guest speaker, Sinead Sweeney, who is the PAYE Modernisation Change Manager for Revenue Commissioners. Sinead is very much on the front line when it comes to PAYE modernisation and will also deliver a presentation today from Revenue's perspective. For our Q&A session, we will have Paul, Sandra and Sinead. We will also be joined by Audrey Mooney, who is the support manager here at Thesaurus Software and holds various qualifications in payroll management. We will also be joined by Laura Murphy, who is an employment law expert here at Thesaurus. Laura will be having a very quick look at GDPR and what it will mean for your payroll bureau. Just a quick look at the agenda then. First up is Paul, who will discuss how PAYE modernisation will affect your payroll bureau. This will be followed by Sinead with the revenue presentation. Then finally, we will have the questions and answers. Throughout the webinar, please type in any questions you may have into the questions tab on your control panel, and we will try to get through as many questions as possible. Just bear in mind that there are a lot of attendees logged on today, so we may not get through them all, but we will do our best. Today's session is being recorded, and we will email all attendees later today with a link to the recording and a copy of the presentation slides. Finally, this webinar is CPD accredited and will give you 1.5 hours of CPD points. If you would like a CPD certificate, please complete the survey at the end of the webinar and we will send your certificate to you in the next few days. So that's it for me. I'll now pass you over to Paul to begin today's webinar.
Okay, thanks there, Rachel, and hello everyone. First of all, we're going to look at an overview of PAYE modernisation. As Rachel said, it's probably the biggest overhaul of the PAYE system since PAYE itself was introduced back in 1960. And also just to mention to you at this stage, and for any of you that were on our previous PAYE modernisation webinars, there will be some duplicate content to what you've heard in the last webinar, but I've tried to keep the duplicate material to a minimum. So for those of you who've previously tuned in, this is both a refresher and an update. Okay, so currently lots of employees are being given the wrong tax credits and cut-off points, and this is because Revenue only gets payroll data once a year in the form of the P35. Receiving the data in real time will ensure that Revenue can allocate the correct credits, thereby avoiding over and underpayments of tax. Revenue will know where the taxpayer is working and how much they are earning. Many employers are not operating PAYE correctly in that they don't register new employees or they use out-of-date tax credits. So this has also been addressed by PAYE modernisation. Essentially, a file much akin to a P35, or we call it a mini P35, will be submitted electronically to Revenue on or before each pay run. In most cases, this means a file is submitted either weekly or monthly. Also, the retrieval of tax credits will be automated, which should ensure that the correct credits are being applied by employers. And also part of the new system is that employees will also have full visibility of their own tax affairs through their My Account, and I'll touch on this later. With PAYE Modernisation, there are two new files that you'll need to get used to. One is called the Revenue Payroll Notification, or RPN, and this is used to retrieve tax credits and cut-off points for new and existing employees. So this basically will replace the P2C file. And next there is the Payroll Submission Request, which is known as the PSR. And this is the one I refer to as the mini P35, which will be used to submit payroll data to revenue each pay period. So the full specifications are included in the links there on the screen, and we've also included them in the handout section on your control panel if you wish to download them. So in summary, instead of a yearly P35, there will be a mini P35 submitted with each payroll run. The checking for updated tax credits and cut-off points will also be an integral part of each payroll run. And details of employees starting and employees leaving will be included in that mini P35. Time-saving benefits will come as a result of APIs in the payroll software. API itself, that stands for Application Programming Interface, and it enables different software applications to communicate with each other. So in our case, it allows our payroll software to directly interact with revenue systems. So instead of the very manual routines of downloading or uploading, selecting file locations, logging in screens, etc., there would hopefully be just one submit button to replace all of this. For example, look at how tax credits, or P2Cs, are retrieved at present. You log into your ROS account, you go to the Revenue Record tab, you then select P2C details, you then search the relevant tax year, then you export, which involves choosing where to save to. Then in your payroll software, you go to the relevant P2C import section. You need to select the correct file from the correct location and then import. So by my count, there are at least 9 steps involved there. With the API, it should just be one click or thereabouts to achieve all of the above. Similarly, with the periodic payroll submission, which contains information similar to the annual P35, the actual transfer of this data to revenue will also be a one-click process. Because of the APIs for P2C retrievals, which are then the new RPNs, and the APIs for the file submissions, the actual work required each pay period should be less than it is at present. So just looking at a typical pay period there, the sequence of events will be as shown on screen there. The first thing you do is you enter the details of new employees into the payroll. Then you retrieve the latest tax credits, which is handled by the API. Then you enter the pay, hours and deductions for the various employees. Next you process and finalize the payroll. Then you'll be submitting that payroll submission request to revenue, which is handled by the API. And then finally, and probably most importantly, you distribute the pay slips and pay the employees. We are hoping that the responses to the API requests from our software will be answered in seconds by revenue systems. And this is something we feel is important to the user experience. In the UK, where they have a similar system, the response is usually answered within 10 seconds. It should be noted that the APIs will use the employer's or the agent's digital certificate, and this cert will need to have been installed on the computer. If the user can log into ROS on the computer, then it has the cert installed. Okay, this is one of these things we need to do in terms of the CPD accreditation. So we have a quick poll from one of the slides we were just after covering, and the question here is, what does RPN stand for? Is it A, Revenue Payroll Number, B, Real-Time Payment Notice, or C, Revenue Payroll Notification? So at the moment there should be a poll on your screen, and you can just tick which option you think is the correct answer. Okay, we have 87% there, so there's a few of you not paying attention. Okay, so the other thing about the new system is that there will be no more P forms. So at the end of the tax year, the individual taxpayer will be able to view and print their official certificate of earnings and deductions directly from their My Account portal. So this means that P60s are no longer required. The files being submitted each pay run will have details of employees commencing and employees leaving. So this will mean that P45s and P45s and P46s are no longer required to be completed by the employer. And as revenue will be receiving file submissions each pay period, the annual P35 will no longer be required. In addition, this periodic file will eliminate the need for P30s. Okay, we're going to go through a quick demonstration of how the PAYE Modernisation will look in the payroll software next year. And I'm just hoping, because this is a live demo, that nothing crashes for me. So on the screen there you have the software, which hopefully you're quite familiar with. And we have the process icons, which will now become more or less a mandatory part of the software because it's so essential. We have various indicators built into the process icons. So the first part of the process would be where you would enter details of new employees, or you change details to existing employees, their permanent details, for example, address or whatever. The next item, which is marked to do, is here we need to we need to click this in order to retrieve the tax credits and cutoff points for the employees. And this will also retrieve the tax credits and cutoffs for the new employees that you've entered. So I'll just click on that button there. And we'll see it's contacting revenue, it's retrieving the RPN requests, and this all replaces you having to log into the ROS screens and download files, etc. Now, I did mention earlier on in the presentation that this will be a one-click process, but at the moment, just to show you what's going on in the background, I do have it broken down into a number of steps. So the first thing is it's showing you there what information it has retrieved from revenue systems in relation to the employees that are on file. And I should point out all those employee details are fictitious, so there's no actual real information included there. So it has retrieved information there in relation to 15 employees, and we can actually have a look at the source file that it retrieved from the revenue system, and this kind of that's in an XML format, and it's probably very similar to, you're probably familiar with that type of format from looking at your P35s each year. Okay, so we click on update, and in this case we can see here it's updated 2 employees, because in this particular case it's found that their RPN numbers, which is a new feature in 2019, their RPN numbers have incremented for those particular employees, so it knows that there's new information for them, so it has updated their files with that information. So just click OK, and we'll close out of there. So that's that particular step done. So as I say, it probably will be a one-click, at the very most maybe a 2-click process. Probably one click, it'll say, yeah, we've imported everything. Do you want to have a look at the logs, maybe to see what's happened or not? So the next thing you will do then in the typical payroll run is you go in and you'll enter the hours and overtime or whatever for the employees. And let's say we've one change here. Update. Okay, so let's say we've updated the details for the hours for all the employees, and then we go in and have a look at the preview for those employees, and we're happy with that. Then we go in and we'll do the actual finalize of the payrolls themselves. Update. Okay, so that's that updated, and now we can see that under the PSR process icon, we have one outstanding. So we click on that, and again, as I said before, we'll see if we can make this as much of a one-click process as possible, but for the purpose of demonstrating what's happening here, I've broken it down into the constituent parts. So on that screen there, we click prepare the PSR. Then we can actually have a look at what is contained within the PSR. And again, it's very similar to your P35 type of display that you'll be used to before. But you can see here it has, say, the individual payslip items for each employee, and and it's their periodic information in that particular pay run that's included. So I'll just close out of that. I'm actually preparing two different file types here. There's an XML format and there's a JSON format, but we more than likely we'll decide ourselves. This is like an internal matter, a technical thing that we will consider which particular format to use when we're transmitting this file to the revenue system. Next thing then, we'll submit the PSR to revenue. And there it is, it's been successfully received and we're finished. So the next thing we do after that is just print out the pay slips or email the pay slips and then pay the employees and produce whatever reports we need. Okay, so that's that demonstration. Okay, do you want to go back to, sorry, I'm just getting Rachel here to go back to the PowerPoint. Thanks, Rachel. Okay, so moving on from that, the demonstration I showed you there obviously involved everything happening the way it should happen, but from time to time there are going to be situations where corrections are going to be required. So how are corrections handled under PAYE Modernisation? So first of all, corrections can be made for incorrect submissions. If the correction means that more tax is payable for a previous month, revenue may apply interest. Also, a correction after the month's close-off or sign-off date, say after the 23rd of the following month, this will be seen as a change to a statutory declaration. If there is a constant pattern of corrections for particular clients, or if there is a pattern of late submissions for particular clients, revenue may take corrective action such as site visits or audits. Corrections are dealt with on the basis of follow the money. So if an employee is over or underpaid in a particular period and their pay is adjusted in the next period to correct this, no correction submission is actually required because the payroll is reflecting what was actually paid. However, if an employee is paid an amount different to what it says in the payroll, then a correction submission will subsequently be required. I suppose, you know, in terms of the demonstration I showed you there, the software, probably the more difficult thing to do and to make it very user-friendly is the handling of all the various corrections that are required. And maybe in a future webinar, I'll show you how that is actually done. Just another couple of points. Data alignment. In the latter half of 2018, the payroll software will prepare a return much like an employee register or say a P35 without the figures for submitting electronically to revenue. This will enable revenue to have as accurate information as possible for the new system or for when the new system starts in 2019. So Ross will actually seek this submission for all employers, I think it's from June onwards. The next item is disputed liabilities. One of the main shortcomings in the UK system is the difficulty in reconciling taxes owed where HMRC's figures are different to what the payroll says is outstanding. This can happen quite easily where employees are moved from one system to another. Unfortunately, with the UK system, there is no facility to query or drill down into their figures. One of the features of the new Irish system will be an API whereby the payroll can query the data submitted so that the payroll can then perform a reconciliation between this data and what it has on file. Revenue estimates that of the total 208,000 Irish employers, up to 60,000 employers still calculate their payroll manually or have nil liability. These manual employers will still be able to calculate manually. However, in each pay period, be it weekly or monthly, they will need to log into ROS and enter all the required details for all of their employees. So it's a bit like manually completing a P35 each pay period. And this facility in ROS will only be available for employers with 5 or less employees. Also, before processing the payroll in any week, they will need to religiously log into ROS to get details of tax credits and cut-off points. This again will be a very manual process and prone to error. So for these employers, for their sanity alone, never mind the huge time savings, it should become apparent that they should either be using the services of a payroll bureau or that they should be using payroll software. Just to mention the effect that I see, or say how it impacts employees themselves, as I probably mentioned earlier, employees will be able to log into the revenue through their My Account and view what has been submitted in relation to them by the employer. I suppose that would be a bit like them being able to see their pay slips for each pay period during the year, but it won't be a full official pay slip, but more like a pay and deduction statement. Employees will also be able to allocate their credits and cut-offs between multiple employments. They'll also be able to inform revenue of changes in employment. And at the year end, employees will be able to view and print their official certificate of earnings and deductions. So this will more or less replace the P60. And I believe revenue are in the process of informing banks and other financial institutions that this is the actual type of documentation they should now be looking for credit applications, etc. Earlier we covered the employer's typical payroll process. So you will no doubt have your own processes which should be broadly similar. In addition, you also manage your client communications around payroll. So if you were anything like I was when I was in practice, these communications may be somewhat informal. Perhaps you wait until the client sends stuff to you before doing anything. This may be a bit more formal if the payroll is live with employees actually waiting to be paid. Then again, you may be really well organized, but if not, from 2019, we strongly recommend that you put a formal system in place that records and timestamps your requests to the client for payroll details, like hours, new employee details and such like, and that also records and timestamps the client's reply. In addition, you should seek the client's official approval before the payroll is finalized and have a system to log and timestamp this approval. So here at Thesaurus, we're already working on ways of helping you with automating this process as much as possible, and we will keep you updated throughout the year on this progress. So communicating the changes to your clients, well, the first thing is you probably need to tell them about what's happening before revenue do. And I know the revenue will shortly be embarking on a major postal campaign to let individual employers know about the new system. As I say, it's preferable that the client does hear about the new system from you first. You give them a heads up effectively. We have included I think it's in the handout section there, and it will also include it with it is in the handout section? Yeah, we've included in the handout section a suggested draft letter, which you could probably include, or which you could probably send to your clients, and obviously you'll amend it whatever way you see fit. It's a very basic letter, but at least it lets them know about the new system that's coming on stream next year. The letter of engagement. This will be quite important because of the need to get things right in a much more timely manner than before. It will be important that you set out in your letter of engagement who's responsible for what. If corrections constantly occur because your clients keep giving you the wrong information or keep providing the information late, the client needs to be aware that any interest that revenue charges or that any additional fees that you need to charge will be their responsibility. Therefore, the things you'll need to set out in your letter of engagement: what exactly are your services and the deadlines by which time you must be provided with payroll information, your fees for this service, what happens when information is incorrect or not provided in time for the deadlines, the method of calculating your additional fees when this happens, how the accuracy and timeliness of the payroll is ultimately the responsibility of the client, and that your role is to calculate, process, submit returns using the information provided by the client. The majority of clients should find that the new system causes no extra burdens either on them or you. It's the messy client who will be the most affected, and it is this very client you need to try and work on changing their mindset. I probably mentioned it in a previous webinar that we're working on the letter of engagement. Now, I think because the letter of engagement really won't be needed until later on in the year in relation to PAYE Modernisation, one of the things we have included in the handout section is a GDPR addendum, and I'm just going to address that later, but that's something that's probably quite important for you to get out to your clients before the 25th of May anyway. One of the things I just wanted to mention here is is the honour before process, I actually see the new system as hopefully running quite smoothly. From the technical point of view, it's up to the software providers and up to revenue to get the systems right so that the whole thing works properly. But from your own, I suppose, perspective and from the employers, I think the major change and the major challenge here is the honour before deadline, which is obviously a big change. There are some types of industry out there where, the likes of hospitality or construction, where I suppose payments into the hand would be a thing historically that they would have done. And this would be very difficult, to accommodate under the new system. So I'm just joined by Sandra here, who's in practice, and to discuss this particular issue. So what would you think of, what the challenges that I suppose the bureaus would face?
Yeah, I think accountancy practices and payroll bureau providers where you're relying on clients to provide you with the information on or before the payment date, it'll very much have to be communicated and understood by the clients, the responsibility and the challenges of that. Also, if you're doing a number of payrolls, you can only do so many payrolls at any one time or on a given day. So that is also going to have to be structured in terms of, like, if you're doing 20 weekly payrolls for 20 different clients, and now you're going to have to do it on or before as opposed to, whenever suits throughout the week. That in itself is also going to bring time challenges in terms of staff availability. Also in terms of notifications being made, and as Paul mentioned in reference there, the difficulties with different industries where the hours might change and the payments are being made without actually getting around to notifying you who is actually processing and calculating the payroll. So I think there's certainly a number of challenges, and there's maybe a few things we can talk about in the Q&A session as to how to prep both yourselves, your staff and your clients for the changes that are coming.
I know one of the things that we mentioned on the employers webinar yesterday was that some of them might actually consider doing the back week.
Yeah, so some employers are currently paying their staff, on a Friday for the week for the work completed that week to the Friday, which obviously leads to challenges then that if the payment notification has to be made to revenue on or before the payment is made, it has to be made that Friday, and you may not necessarily, the employer may not be in receipt of that information until the Friday lunchtime as to exactly which staff have shown into work or not shown into work, as the case may be, especially with construction industry and the hospitality sectors. So one of the suggestions that we would have would be that for those employers to consider working a back week and implementing that system throughout 2018, so that when 2019 kicks off, that you're working a week in lag, which obviously then should make the processing of the payroll notification an awful lot more streamlined and avoid the necessity for corrections.
I suppose that'd be a bit of a challenge, because
yes,
if you did implement that, I suppose, what would you do with the week that's just dropped out of the system?
Well, that's it. You're trying to deal with that week, and also employees aren't going to want to go without a week's wages. How do you claw back the payment if you're now working a week behind? Is it something then that has to be done over maybe a period of time where you're clawing it back from the employee over a number of weeks following the week that you implement it or the month that you implement it? So yes, there's a number of challenges associated with it, but I think it's something that each employer, and obviously if you're the person that's processing the payroll for the employers as a bureau service through your accountancy practice or payroll bureau practice, it's something you're going to need to discuss with those employers. Obviously you will have straightforward employers where they just have staff who are paid a weekly or monthly wage, and it may already be a month in lieu or a month in lag or a week in lag. They're not going to be the issue. So I suppose it's identifying which clients are affected by it and what processes can be put in place for them.
Just in your own practice, I mean, you obviously have somebody there that looks after most of the payrolls that you do.
We would have a number of staff who would look after payrolls, and then
So
we all try to do one or two to keep ourselves updated on payroll.
So what would I'm just thinking if one of them goes on holidays, would it mean if you have a practice, say that there is one person doing the payroll for the clients, they go on holidays, I presume they can do the payroll in advance?
They can do the payroll in advance to cover off the holiday periods, and then if there is any corrections or amendments to those weeks where they've been obviously estimated, they can be corrected then in the week following return from holidays.
So under the new system, when that person's going on holidays, they'd send in the payroll submission request
for the
those,
next
those particular weeks.
Yeah,
and
for
then
the week they're finishing plus the week or 2 weeks that they're going to be on holidays. Absolutely.
Okay. So I suppose I was saying throughout the presentation for the straightforward employer, it really shouldn't be that much of a challenge. The new system, if anything, should actually result in a time saving, I think.
Eventually.
Sure. But I suppose you got that 6-week period as well in 2019 where between the 1st of January and the P35 deadline for 2018 with the two
it's going to be a huge challenge for payroll bureau providers and accountancy and bookkeeping practices that provide payroll services, because they're going to be dealing with the normal level of work that they have between the 1st of January and the P35 deadline, as well as implementing the new system on or before, which again has timing challenges and also has obviously the challenges then that where you're normally doing payroll, you might do 2 or 3 months payroll at a time for an employer. You're now going to have to do it weekly so you're going to be picking the file up a lot more. So I see an increased cost as well for those employers. And I think all that needs to be communicated to them in 2018 so they're well aware of what could happen. And also, are you going to have sufficient resources for the extra work that may be involved in picking that file up weekly as opposed to once every 6 or 8 weeks.
I know one of the things they did in the UK was they had a moratorium on penalties and such like in the first year or so for late submissions. I haven't actually heard from Revenue yet whether they're considering a similar relaxation, but certainly that would be a great way of maybe letting.
Yeah, I think there certainly has to be a settling in period, and I think Revenue will have to provide that comfort or facility for practitioners and for payroll bureau providers as well, because of the timescale, especially in that first 3 months. It would certainly make sense, and this is something that we're certainly raising at the various TALC committee meetings through the Irish Tax Institute as well. With regard to that, so we are, looking for leniency to be applied in those earlier months, especially for the practices where they're doing multiple payrolls.
Okay, interesting times.
Yes.
The next section here is recent updates and changes. Now, there haven't actually been any specific updates and changes in the last couple of months. So I'm going to hijack this section just to give you a quick update on GDPR and how it relates to your practice or to your bureau payroll processing. We do have a big webinar coming up on the 1st of May relating to this particular subject, but this is really just a snapshot of maybe the things the things you need to be looking at right now. So I'm happy to be joined here by Laura Murphy, who's our in-house GDPR expert. We're very fortunate to have one.
Thank you very much, Paul. This is great timing. If you're not already scared with all that PAYE modernisation, I'm just going to scare you some more with some GDPR news now. So you're probably all familiar. GDPR is the buzzword at the moment. It refers to the General Data Protection Regulation that comes in on the 25th of May this year. The whole premise around the new regulations is to put greater controls around how personal data is managed. I suppose if we think back, current Irish data protection legislation dates back to 1989. So that's quite some time ago, and it predates how we use data today in the world of internet and social media. So certainly some changes were required, but that doesn't mean that it hasn't provided a nice headache for employers and payroll bureaus and everybody really. When we do our GDPR webinars, we go into a range of details on kind of the key the key changes to familiar concepts. And I've listed them here, and I'm not going to go through them all. You'll be glad to hear. But I just want to point out two of the key changes that I feel will specifically affect payroll bureaus. So one being the changes to data processors. So as a payroll bureau, you will be considered a data processor. You're processing data on behalf of your client. And then I'll also want to just touch on the new enhanced rights of data subjects, which will be data subjects will be both your own employees if you do have staff and your client's employees, so those employees for whom you're processing payroll. Perfect. So data processors, the GDPR brings in a new change of rules for data processors. So as I said, as a payroll bureau, you will be a data processor. The current data protection legislation places most of the responsibility to comply with data protection laws with the data controller, so i.e. your clients. However, now under the GDPR, as a payroll bureau, you will have much more direct compliance responsibilities. And central to these new responsibilities is the requirement that there must be a written contract in place between a controller and a processor, so between a client and a payroll bureau. And in addition to having the contract in place, the GDPR specifically sets out a number of terms that must be included in this contract that relate to data protection and how you use data. And I'm not going to go into all of those terms today, but many of you already will have terms of service or letters of engagement or EULAs. You've used interchangeable terms, no doubt, and you'll already have them in place with your clients. So our advice would certainly be that you don't need to rewrite every contract that you have in place with your clients, because that would just take, it'd be extremely onerous. But what we would suggest, and Paul, I think has alluded to it earlier, would be to issue an addendum to your contracts, and that would be in the form of a data processor agreement. So what that would cover would just specifically refer to these requirements that we now need to include under GDPR, so you'll be becoming compliant that way. The actual onus to put this contract or addendum in place is actually with the data controller, so your client. However, we would feel that many small employers who you may be working for aren't au fait with the regulations. So certainly we would suggest to payroll bureaus to use this as an opportunity to just get ahead and put yourself out there as somebody who's compliant with GDPR and get this addendum in place. And certainly from a time-saving point of view, it would save you a lot of time if you had your own standard addendum that you're rolling out to all clients, as opposed to filling in and agreeing new addendums or agreements with every client that might bring it to you. So we would see the DPA as really a useful document in terms of GDPR compliance.
Yeah, that's the document that we've actually included with the handout. So again, like you would be editing that document to meet your own requirements, but that's our sort of suggestion on what needs to be covered.
Yeah, absolutely. It's a really useful template, I think. So secondly then, just before I finish up, is the point in relation to the enhanced rights of data subjects. So as I said, the data subjects will be your employees, but equally the employees of your clients who you're doing payroll for. So under GDPR, data subjects have enhanced rights. The first right that I want to go through, I'm not listing them all here today, I'm just going to go through three of the top ones. But the first one is the right to access. It's not a new concept that employees will be able to request access to data that's held on them. However, there is a new recommendation that where possible, employers should provide their employees with access to a self-service login where they can view data stored on them. And this backs up the whole concept of transparency and ease of access to data, which underpins the GDPR. So I suppose they've made it a recommendation because it's not going to be possible in all workplaces, but I certainly think employers should consider having a self-service option. We also have the right to rectification. Individuals are entitled to have personal data rectified if it is inaccurate or incomplete, and this is an existing right. But what I would point out here, just to say, is that the onus is on the employer to ensure that your employee records are kept up to date. Now, for your clients, it'll be their responsibility to ensure that they are giving you the correct records for their employees. But even if we think about it from your own employee's point of view, if you were to send out, well, I'm going to say P45 before they go, but if you were to post out a P45 to an incorrect address, that is the failure is on your side as an employer. And so certainly what I would suggest is that employers take steps to give employees as many opportunities to update their details themselves. So you're taking a little bit of the responsibility off yourself as an employer. So again, this could be, you might have a contract clause to include that employees let you know when their details change, but equally this is where a good self-service system might work well as well, because employees will be able to log in and change their own details at will and as they change. So then just the final point that I want to touch on in relation to your employees, but arguably, one of the more important ones as well is the right to be informed. So we're going back to our concept of transparency. Employers must be very clear with employees about what information you hold on them and what you do with it and why you hold it. So up until now, the common practice has probably been across most employers is to include a standard contract clause that kind of sets out we'll hold your data for HR reasons or for payroll reasons. But under GDPR, that's no longer sufficient to just have that one kind of catch-all clause in your contract. So employers need to be reviewing their employee data protection policies and possibly writing new employee privacy policies that will go into detail on the processing of employee data, even, for example, why you hold PPS numbers and addresses. So that might be something you need to consider for your own employees, but certainly in the role of Payroll Bureau, I kind of see that you would have a role or some sort of responsibility in educating your clients on this is what they need to do. But just before I finish up, there's probably another point that Paul and I discussed on this in terms of employee policies, particularly for your own employees in your practice, will be your own confidentiality clauses, and certainly you'd want to just be sure that if your employees are having access to payroll data, clients' data, that's confidential issues.
I think that's kind of hard coded into most accountancy practices anyway. Okay, well, thank you for that, Laura. So I'm just going to pass you back to Rachel now, who is looking after proceedings here.
Okay, so thanks for that, Laura, Paul and Sandra. Just while Sinead is getting set up for the revenue presentation now, we're going to play you a quick 2-minute video of Thesaurus Connect. So just bear with us for a few seconds while we get it set up.
Welcome to Thesaurus Connect, our latest cloud add-on that works alongside Thesaurus Payroll Manager. With Thesaurus Connect, you can automatically store payroll information in the cloud and enable online access anywhere, anytime, for you, your clients and their employees. You'll be up and running in seconds. Secure online backup. Automatically synchronize and backup data to the cloud, protecting against ransomware and cyber attacks. Bureau Client Dashboard. Get online access to clients' payroll information. Invite clients to their own online dashboard, which can be branded with your bureau's logo. Clients can access payslips, payroll reports, annual leave requests, amounts due to revenue, and employee documents. Employee self-service portal. Invite employees to their own online portal. Employees can view and download payslips, P60s, and P45s. Easily submit holiday requests. HR and annual leave management. View all upcoming leave in the new online company-wide calendar. Authorize leave requests to update the calendar. Upload HR documents, including employee contracts and handbooks. Book a demo today to see how Thesaurus Connect can enhance your payroll service offering.
Okay, so now I'm delighted to hand you over to Sinead for the revenue presentation.
Good morning, everybody. I suppose what I'd like to do this morning is really probably follow up on what Paul has gone through with you there in terms of how the system is actually going to operate, but from a revenue perspective. And I suppose just to give you some key reminders of things that we would like you to do and the way that we would like you to start looking at your current business processes. So I suppose we'll just go through the slides. I'll give you an overview and some context in terms of why we're actually modernising the system. And I suppose really it's important to bear in mind that the system that we have has been with us since the 1960s, and very little really has changed in terms of how we actually calculate and collect the tax in respect of our employees. But everything else around us has changed dramatically, particularly the nature of employments, where you now have a large proportion of the population who no longer have just one job for life, and they work several jobs sometimes at the same time, and several contracts of employment sometimes for the same employer at the same time. And it's important to be able to capture all of that information in an efficient way to ensure that those people are only paying the right amount of tax. They're not overpaying and they're not underpaying, and that the tax credits are allocated correctly between their employments. Payroll has changed significantly, and obviously with the advancements in payroll, it's important that revenue is able to capture data in an effective manner. ICT has assisted us in this process, and we're now able to offer a real-time system whereby individuals can actually log on and look at their pay and deductions as it happens. And people expect to be able to deal with revenue in that manner. They're always surprised when they ring the Revenue 1890 help desk because there's been a change in their pay for a particular period, and they're reading information from their pay slip. And they're surprised when the person on the end of the phone isn't able to answer their query because we don't actually have sight of that information, as Paul said, until the P35 comes in the following year. So I suppose that's just to give you some context as to why we're actually doing this. We would see three main beneficiaries from the process, and I suppose really the employer, the employee and ourselves in revenue. And what we want for the employers is that they will have seamless integration of their systems with our systems, and that will all work in the background without the need to have to log in and out and upload information. We want to minimise the cost for employers to comply. There is a significant administrative burden for employers at the moment in terms of all of the P forms that they are required to fill out, and most of them really have no benefit to the employer. Some are for the employee, but the majority of them are revenue required forms. We do want to maintain that the right tax is paid, and we're not changing the current payment dates for that tax, and ultimately all of this should result in time savings for the employer. For the employee then, they will have access to simplified online services. And really what we want is to ensure that they are maximising the use of their entitlements. We have carried out an analysis of the 2016 P35s, and it is evident that there are a lot of people overpaying tax, but there are also a lot of people underpaying tax because their entitlements have not been utilised correctly. To that end, into 2019 and into the beginning of 2020, we will carry out an automatic end-of-year review for every employee. So this should ensure that their tax is correct at the end of the year. It will give them real-time accurate data, so they'll now have a level of transparency that they haven't had before. And they will be able to log on to Jobs and Pensions under My Account and view what has actually been paid and deducted on their behalf by their employer. For ourselves in revenue, we will now have a statutory in-year employer return, and this will be a monthly return. This will make compliance easier from our perspective because we'll now have sight physically of the returns on a monthly basis or a weekly basis if the person is paying a weekly payroll. We will now have accurate up-to-date income details, and over time this should reduce customer contacts. Obviously, when the system goes live, we know there will be an upsurge in customer contacts, and we are putting measures in place to actually deal with that. It will also allow us to carry out timely targeted interventions. Currently, if we go out to do a PREM audit or a PAYE intervention, we're looking at information that has happened possibly a year to 2 years ago, and the situation may have changed dramatically within the employer's workforce. So now we will actually be able to look at the information as it happens. In terms of the figures that we're currently dealing with, and to put some context on the statistics, for 2016 we had 2.7 million active employments, and that includes people who are in receipt of a pension. We've 206,000 employees that are registered as having more than one live employment, and we certainly have a significant amount of employees that are operating multiple employments but with the same employer. We've 208,000 registered employers, and 110,000 of those employers have less than 5 employees. And that's certainly something that we are cognizant of in terms of how we're managing the changeover of the system. 98% of those employers did file through ROS. And just to give you some idea of the amount of processing and administration that's involved, we processed 5.4 million forms. So that's all of those P forms that we're now going to abolish. So that should see a significant reduction in the administrative burden for the employer. I suppose just to remind people of what their current obligations are, every time an employer pays an employee, they must apply the latest P2C. They must calculate the tax that's to be deducted, income tax, USC, PRSI and LPT, and they must provide that employee with a pay slip that shows those pay and those deductions. In terms of their revenue reporting obligations, every time somebody commences or leaves an employment, the employer must complete a P45, P46. Every month they must submit a P30 or quarterly if that's the way they're set up. And by February of the following year, they must complete the P35 with the associated listings for each of their employees. So 2018 will be the last year that these requirements will be in place. In order to do all of this, we've had to amend the legislation that supports the PAYE system. And that legislation was signed in and adopted on Christmas Day this year by the President. I suppose the main provisions are that the revenue payroll notification will now replace the P2C, that payroll submissions must be submitted on or before each payroll run by employers. The statement that will be issued by revenue will be deemed as the person's return if they don't accept it or if they don't make a correction to that return. And if there are upload difficulties due to a persistent technical failure, there is legislation there to cover that. So the likes of our most recent Storm Emma, where people maybe were without power or where offices were actually closed and it wouldn't have been possible to upload the information, there'll be no penalties in respect of something like that. Direct debit will continue as it is now, but there will also be the option for variable direct debit. And that has been included from a lot of the workshops that we carried out with both employers and representative bodies, whereby they requested that we would put in the option to have a variable direct debit, which would mean they would just pay the amount that's due for that period, rather than a set amount whereby they may have an underpayment or an overpayment at the end of the year. In terms of the process flows, and I suppose Paul's Thesaurus demonstration has demonstrated this, but the employer will go on to pay their employees. They'll be able to access the latest revenue payroll notifications. They will calculate whatever the person is due to be paid for that period. They will finalise their payroll, send their file for processing to the bank, create their pay slips, and at the same time send a report of that information to revenue. The employee won't really see anything different. They'll still obviously receive their pay. They'll receive their pay slip, but now they'll be able to see that information in jobs and pensions in my account. So in order to get rid of the P30 then, if we take the example of somebody who's paying weekly. So weekly they will send in their payroll to revenue once they've finalised their payroll. At the end of the month then we will send them back a statement which will show the total amounts for that month, and it will also show each of those submissions. The employer then has the option to review that statement. If it's correct, they can accept it. If they need to make a correction, they have a period of time there in which they can make a correction, and we will then reissue them with a new statement. If they do nothing, we will deem the return as being accepted, and that will be the employer's liability for that period. This will allow us to debt manage underpayments in year, and it will also assist us in terms of our risk analysis based on the information that has been submitted by the employer. For the P45, P46 process then, when somebody new commences with an employer, they will go onto their payroll system, they will insert a commencement date, and that will allow them to access the latest revenue payroll notification and run their payroll as normal. When somebody is leaving, then they will insert a cessation date on the payroll, and then when that payroll comes into revenue, revenue will be aware that this person has now ceased working for that particular employer, and their credits will be available to be transferred to their new employment. The employee themselves can also go on and manage their employment record via the Jobs and Pensions Service. And again, this is where they can go on and set up a new employment where they know they're commencing in a new employment maybe in a couple of weeks' time. So from 1/1/19, there'll be no obligation on employers to provide P60s. Instead, the individual employees will be able to log on to My Account and view an end-of-year statement. And this statement can be viewed at any point during the year because as the pay is reported to revenue, this statement will be updated. So I suppose for most people the P60 is required for mortgages or maybe for the HSE or for applying for SUSI grants. We will be informing all of those institutions that the P60 will now look different and that the person will be accessing it themselves from the revenue system. In terms of the end of year process, well, there really is no end of year process anymore, and each month stands on its own as a statutory return. So there isn't an option to tidy up at year end. So like every other statement, the December statement will be available in early January, and again that statement will be deemed as the return if there's no corrections made by the return due date. And again, this will allow revenue to debt manage for underpayments in year. So I suppose just quickly to run through what's involved currently in terms of running payrolls. So the yellow boxes are what the employer generally has to do. So they log into payroll, set up an employee, export a P45. Then they log into ROS. They have to wait until the following day, have an upload to the P45. They get an email. Then they download that P2C. They log back into their payroll, upload the P2C and run the payroll. Quarterly then they log into the payroll, download the P30, log into ROS, upload the P30, wait a day, log into ROS and get a receipt. Yearly then they log into the payroll, download the P35, publish their P60s. So again they have to log into ROS and upload the P35. So there's certainly a lot of transactions required just to run the payroll and get that information into revenue. What we want to get to is the top three yellow boxes where they log into payroll, set up their employees and run their payroll. Monthly they can go in and look at their statement, but if they don't, we will deem it. And quarterly then, if they are quarterly, they log into ROS, make a payment and then get a receipt the following day. So it does certainly simplify the process. Just to give you an idea of how it's going to look and feel, and I suppose it's important to bear in mind that this is how it's going to operate where you're not using an integrated software system, or maybe where you have to, outside of the payroll software system, review maybe a payroll notification, or you want to go in and look at the employer statements. So basically there'll be four options on the home page on the revenue website. Review revenue payroll notifications, payroll submissions, view payroll submissions, and then look at the employer statements. So if you want to request a revenue payroll notification, you'll either do that by an upload file request or by requesting them in an online format. But bearing in mind, depending on what option you're using with your software, that may actually happen in the background and you won't have to go into ROS at all, and that information will be uploaded into your payroll. So you need your ROS digital cert to be able to access this, so it's the same as it is now. You go in, input your ROS digital cert, use your password and then request RPNs, as you can see is down on the right hand side. Once you've requested that, then you'll get back a summary and that will show that the 5 RPNs have been returned, one hasn't because there's a validation error, and then you'll be able to go in and look and see what those results mean, and that validation error will be in plain English, so it'll be easy to understand as to what's gone wrong with that request. Then if you want to submit a payroll, you can submit the payroll by a file upload or an automatic submission of the payroll. So basically you'll again log in using your ROS digital cert, and then you'll have your payroll file which you'll submit, and you'll then see that it will be processing. And once that's processed, then you'll get a payroll submission results acknowledgement. And again, you can download that and that will show you what has actually happened with your payroll submission. So the payroll submission results will look similar to this, bearing in mind these are all draft screens and they may actually look different when the design is fully completed. So you can see there that it was in respect of 50 pay slips, the total amount of the deductions, and a breakdown in terms of what went into making up the total amount that has been returned. You can see this one where it says it has been completed with warnings. So you'll see there in the warning, there's a warning about one of the payroll information slips. So that could be an individual, maybe where the PPSN, etc. is wrong. But again, on the live system, you'll be able to go in and look at that payroll run and see exactly what was wrong. This one says it's completed with errors, and you can see there under the payslips tab that there are 3 invalid payslips. And again, this is more than likely due to an error with the PPSN. So then if you want to go in and look at the payroll, maybe to identify those errors, you'll be able to go in, view the payroll, look at ones that are recently updated, and you can see there each reference has its own unique ID. So January run, December run. You'll be able to click on the actual run and the payroll details and look and see what is actually incorrect. You'll see there that this shows you any of the ones that were recently updated. This is in respect of somebody that has 500 active pay slips, and then you can go in and look at each payroll run and see whether it's completed or try and identify where the error is. Again, this is one that has been recently updated, so you can see there there's active pay slips. Payroll submission is 1 for December, but in January there were 3 payroll submissions, so that's where something was corrected. Looking then at the online statement of account for the employer, you can see there that there's a breakdown in terms of the monthly statement. So you can see there that the February statement was deemed, which means the employer didn't have to make any corrections. They didn't go in and accept the statement, so revenue deemed that statement. And then the March one is there waiting to be accepted. So you can go in and view that statement, make sure that the amounts are correct and that they tally with what you have returned. And then you can see there's an option there to agree with that statement and submit that. If you need to go back in and look and see maybe where there were errors, or you've suddenly realised that something was incorrect, you can go back and view them on a weekly basis if you're submitting a weekly payroll, and that's just to give you an idea of how that's going to look. And that's the actual payroll then, so you can go in and look at it from a line detail perspective. So I suppose in terms of the business processes, and certainly I know Paul and the team here have alluded to this throughout the presentation, it is important that you look at your business processes now and that you don't wait until 1/1/19 to start looking at how you're currently running your payroll. We know from being out there and from meeting with employers and certainly with representative bodies that there is a focus on an end of year tidy up option, and that option is now gone, and everything needs to be correct on a monthly basis or on a weekly basis if you're processing weekly payroll. It's important to bear in mind that everything that's now being submitted is very visible. It's visible both to ourselves in revenue, but also to your employees. And they absolutely need to be able to reconcile their pay slips with the data that's being submitted to revenue. We understand that corrections are necessary, and we have allowed for corrections to be built in as part of the system. But it's important to bear in mind that if we are consistently seeing corrections with a particular payroll, that will push that person's risk rating higher, and certainly there will be interventions from revenue to see why there is the need for all of these corrections. In June 2018, we'll be asking all employers to submit a list of their employees, and this is really to ensure that our data is correctly aligned with the employer's data for 2019. And we will be following up with the matching exercise, and certainly we are aware that there are a lot of issues with the data at the moment, both from the employer's perspective, but also from the revenue perspective. So we want to try and get that as clean as possible before the system goes live. In terms of change management then, we are currently participating in a lot of outreach events, focusing on employers and agents. In terms of revenues strategy for the year, certainly the national compliance imperatives are focusing on PREM, so you may see an increase in the types of PREM interventions. Every intervention that revenue is carrying out will be used as an opportunity to make employers aware of PAYE modernisation. We are also going to carry out 2 tailored mail shots to all employers in April and September, so that those will be issuing shortly. We are reviewing the 2017 P35 data, and we will be issuing P2Cs for employees that have only been notified to us for the first time when the P35 came into us. The districts will be carrying out customer service visits, and these purely are to assist the employer with getting ready for PAYE modernisation. They're not audits, they're not interventions, they're purely customer service visits. So you may get a notification from your local revenue district to say that somebody is going to call out to help you get ready with the changes that are required for 1119. We'll also be having a very interactive media and advertising campaign running from June to December. And as part of the letters that are going to go out in April, there will be an option to register for revenue regional seminars, which we hope to run in September and October. Just to give you an idea of some of the events that we've been participating in the last couple of weeks, I suppose that's just a screenshot, and it's a snapshot in time, because we've actually added quite a significant amount of events to that since that slide was actually put together. I suppose the main things that I would like you to take away from the session are that you're ensuring that you're using the right PPSN number for all your employees. It's astounding the amount of incorrect PPSNs that are on the system, and also the amount of duplicate PPSNs that are in use. Making sure that all of your employees are registered with revenue. Making sure you're operating the most up-to-date tax credit search for all your employees. And it's important to check that you have the latest P2C, particularly where people are in receipt of illness benefit, because that will change their existing P2C. Making sure that you complete the P45 or P46 process for anybody who commences or ceases with you, and reviewing your current BIK methodology. And we would suggest that BIK is now reviewed on a quarterly basis rather than an end of year basis, and making sure that you're aware of your duties at the end of the year. In terms of information, there's a significant amount of information up there on the Revenue website under PAYE Modernisation, and we have a dedicated email address if anybody has any questions or queries maybe that we don't get to answer today, or maybe that come to you following on from this session. So thank you for listening to that session, and I'll hand you back over now to Paul, or to Rachel, sorry.
Okay, thanks for that, Sinead. Just while the rest of them are getting set up for the questions and answers here, I would just like to say to please subscribe to our mailing list. Once GDPR comes in on the 25th of May, we will not be able to tell you after this unless you have subscribed to our mailing list. So you can do this in the survey at the end of today's webinar. You can do it after the follow-up email, or you can also do it on our website as well. Okay, so I think these are ready to go here with the questions.
Okay, just one of the things I would just want to say, first of all, obviously Sinead showed you screens there in relation to logging into ROS, etc. I would hope that that would be a rarity, because the software will actually handle all those requests and submissions, and will present the information back to you from the revenue systems within the software. But at the same time, we will provide within the software the ability to, say, download files so that you can upload them within the ROS system, just in case, say, the digital cert is on a different machine to where the payroll is processed, or it is, I don't know, internet difficulties where the payroll is processed as well. So just to let you know that the B2B is the preferred option, which we showed you in the demo, but there will be the facility to also upload files through the ROS system as well.
Okay. So the first question there is, if 4 employees are paid on 4 different days in the same month, will I have to make 4 different returns to revenue?
Yes.
Yes
is the answer to that.
Who is liable for the interest charged by revenue if there was an underpayment of income tax, employee or employer? It is not the employee's fault if the employer cannot operate their payroll.
It's the employer's obligation to deduct and pay over the tax, so the employer has the ultimate liability there.
Is that the question though? Is it I think it's more if the credits
I think
were
it's that
incorrect.
they've calculated the tax incorrectly based on wrong information, I think. Yeah, who's liable? So if the employer isn't using an up-to-date RPN,
Then it's the employer.
But if the employer used the up-to-date...
If the employer used what revenue had issued, then that wouldn't be the employer's fault. And obviously there's been some sort of miscommunication there between the employee and revenue. So that's something that would have to be looked at on a case-by-case basis.
Yeah. It was rare. I think it's rare for an employee to be charged interest.
Yeah,
it's just,
very rare.
Yeah.
okay. If an employee is paid in advance as part of their wages, will this have to be reported on the day the advance payment is made?
Yes.
What happens with revenue P30 payments under the new system and where clients are on a monthly direct debit?
Well, there won't be P30 payments under the new system, so the direct debits will remain in place and the payment dates that are currently in place will also remain in place. So there's no change to the actual payment dates, but P30s are no longer in existence.
I think one of the big changes that I was quite interested in was the variable direct debit, because I know, and I shouldn't be admitting this, but sometimes I do it late, a few days after when it's due, and it is actually it's a process having to sign in and specify that you use your RDI and then sign in again for it to process. Whereas under the new system, you know what the liability is, and the variable direct debit will just be able to basically debit bank account for that amount, so it won't have to remember to do that every month.
Okay, so what about doing the payroll in advance if the person doing the payroll is going on holidays?
You just make the notifications in advance, so if it's monthly payroll and you're going to be on annual leave when the payroll date is due to happen or when the payments are being made, you just process it in advance and make the notification to revenue.
I think the most frequently asked questions here around payment and, somebody going on holidays.
So I suppose there's no change to payment dates and they remain the same. If you're on a direct debit, that will still remain in place, and then as Paul and myself have mentioned, the variable direct debit will also be an option. If you're a quarterly filer or we do have some annual remitters, they will remain the same as well. There's no change to those.
Okay, so there's just one here, what do you mean by payroll clerk is on holidays to put through the submission for the week? So again, this is just if the payroll has to be ran early to facilitate holidays, that the submission will be sent early as well. So it's on or before. Will all employees have to register for My Account?
Well, if they want to see their end of year statement, yes, they will, and we will be encouraging all employees to do that. But obviously, we are aware that there are some people who maybe are not enabled or, don't have the facilities to actually register for My Account. So we will have other options for those to be able to access their P60s. But then obviously they won't be able to see their information in terms of what has been paid over and deducted as people who have registered with My Account will. So I suppose we would be encouraging everybody to try and register with My Account, and it's easily accessible from smartphones now.
Okay, there's a few more questions there about payments. So just to stress, there's no change to payment. If you're monthly now, you'll still be monthly, even though you may be making monthly submissions to revenue.
Yeah, and I suppose just to clarify on the weekly, you're making the weekly notification, but your payment will be still monthly.
Absolutely.
Can I just go back to that question about the advance?
Yeah.
I mean, would a staff loan be treated the same way? If you were to say let's say it's monthly payroll, and say somebody wanted maybe €1,000 of an advance halfway throughout the month, if you treat it as a staff loan, is that still going to be required to be?
Yeah, well, staff loans are different because there's BIK.
How much BIK would there be in I don't know, 14? Would there be any BIK for the 14 days? I suppose it would there?
It'd be 12.5% of the value of the loan for 14
so
days.
It's not an option to treat it as staff
really.
loan. Yeah.
No.
Okay. Will the new payroll system allow you to file weekly and monthly returns for employees for the same employer if they have both, and any time of the month, say if the employees get paid on the 21st of the month?
Yes.
Absolutely.
Yes.
Submission for every pay run.
Yeah.
And as I said, they're all under the one prime registration, then the statement will reflect the weekly and the monthly submissions. So they'll all then be accumulated into a total amount which will be due for that period.
Okay, Sinead, this one's for you. Will Revenue consider issuing a publicity campaign highlighting the benefits of PAYE modernisation for SME enterprises, but also highlighting it will lead to increased costs and compliance on the employer?
Well, we are certainly going to have a publicity campaign highlighting the benefits, but the costs, etc., we don't see that there should be huge costs involved in changing this, because unfortunately what has happened out there is that the practices haven't been followed correctly, and now it's really more bringing those practices into line with what people should have been doing anyway. But costs, etc., are something that we won't be getting involved in.
Thanks, Sinead. The next one's for you as well. In the UK, HMRC provide free payroll software for small employers to assist them with real-time reporting. Will Revenue do the same here?
No, we're not going to be offering any software. For people who don't have software, we will have a template that they can fill in how they have calculated their payroll on the raw system, but we won't be offering software.
Did you want to add something?
Yeah, just it'd be worth mentioning that we do have plans to have a one employee version of BrightPay for 2019, which will be free of charge. Support will be by email support.
What document can be provided to an employee who does not have their own computer to get confirmation of their earnings? Can the employer print out a document, or will it only be available through my account?
Payslips will still be issued.
Yeah, I suppose they
It's
want
like the
official
P60,
revenue.
it's like the P60 information. So, I mean, by rights, they should register on my account, and then they can log in on any computer and actually access that information. So it's not like it's requiring you to have a digital cert. Once you're registered with my account, you can log in on your phone and access that information. But I suppose if an employer wants to provide a facility for somebody to come in and use an on-site computer, there's no problem with that, but the person would be logging into their own My Account. I know some employers have told us that they will continue to provide a type of P60 for their employers. So again, that's entirely up to the employers if they want to decide to do that.
How quickly can an employee set up a My Account?
It's pretty quick once they have the required documentation. So you need a PPSN, I think it's a driving licence or passport identification. And it happens fairly instantaneously now.
You can have one login for like DASP revenue, can't you?
The MyGov.ie.
Yeah.
Yes, if you register for that, you can have one login for several of the government departments.
For applying for
various
statutory payments or whatever
yeah.
as well.
And sorry, just then on that, just one of the points that you mentioned there, will the payroll provide a report that the employer can print out for the employee?
Yes. Well, I suppose we'll probably still provide a P60 type document that the employer can give
Yeah,
the
which
employee.
is like a statement.
If
which
they
would be
want
similar
to.
what they
Yeah.
did. Yeah.
I suppose it won't be an official.
Yeah, it probably won't be
Document
recognised
anymore?
by
No,
the likes of the financial
the official
institutions,
one
not-
will be the one that the person can access from revenue. And I suppose for those that absolutely are unable to access that through an online format, we will be looking at other options for those, maybe through a telephone request service where it will be actually sent out in the post.
Okay, so somebody's just asking, will an accountant have access to revenue payroll reports on behalf of a client who submits their own payroll?
I suppose if their agent
Only, yeah.
certificate.
They have to give them access,
Yeah.
access basically, yeah.
And we're looking at the types of access that agents can have at the moment as well.
And that's what I was going to say, it would have to be, like, obviously we can get into Ross if you're then as the agent of the client, but to see the payroll submitted or PNs, yeah, I suppose we have to ensure that revenue are providing that access on Ross for the agent link.
We're looking at how that agent access is going to work at the moment, so that hasn't been finalised.
Okay, without periodic P30 returns, how will clients be notified if returns or files are outstanding?
I suppose the payroll will also generate the same reports as heretofore, in that, you know, the accountant will be able to submit, effectively send like a P30 report won't be quite a P30, but it'll be a monthly liability report to the client.
Will revenue send something, do you think?
Well, revenue will have compliance on all of that system as well. So, I mean, if we notice that no payroll has been submitted for a period, or, you know, if it's normally a weekly payroll and nothing has come in, there will be a message back through us immediately. And then I suppose if anything happens, there will be follow-up in terms
the
of
payment hasn't
an
been made.
intervention, and particularly, but even just if the return hasn't been filed. And then, as I said, if they don't go in and accept what they have sent in anyway, it will be deemed as their return, and that will be the liability.
But if it's a check payment, for example, and it doesn't come in, you would get a contact.
There will be
with them.
follow-up, yeah.
Okay. Can you discuss employers currently on direct debit who submit an annual return, please?
At the moment, there's not going to be any change to that, so that's still the same.
But the payments
Must meet.
The direct debit must meet the amount.
I know that, but obviously if they're currently on an annual P35,
They still
the
have to
payments will
submit.
still have to be notified on
The
or before
payroll,
the actual
yeah.
payments are made.
Yeah. Well, we're looking at all of that at the moment, so it hasn't been fully tied down as to how that's going to operate. But yeah, as soon as that's finalised, we will be able to put that information up on the website.
Thank you. So somebody just asking, what is the suggested approach when a new employee starts regarding setting up their tax credits, etc.? So it's really what they do now, set them up on the payroll system, and the payroll system will prompt them to check for an RPN.
Yeah, and when you request the RPN, you should get the tax credits and cut-off point that has to be applied to that new employee back. In the
provided they're not
notification
with
from revenue.
another employer.
Yes. But if they're not with another employer, the revenue will probably send back zero.
If they're with another employer, you'll get back a zero.
Yeah.
So if the previous employer hasn't effectively put in the cessation date maybe on their own system, this is where there's going to be maybe an overlap.
There may well be. So, I mean, what we would advise is operate the zero cert, whatever the RPN comes back from revenue, operate that. And then if there is an issue, the individual can contact us directly.
I have a company where the directors decide on what salary to take based on profit after the year end. They then enter a salary over the previous 12 months. Can this still be done under PAYE Modernisation, and will it now incur interest?
Well, there's no changes in terms of how the directors currently operate, but what we will say is it's the payment when the person is actually paid is when it's taxed. So it shouldn't really be going back in over the previous 12 months. But there are options there for directors which are slightly different to the standard employee.
Yeah, I think I'd imagine what will probably happen there is that if the payment is made in 2019, but it relates to the 2018 calendar year, while you might be accruing for the salary being owed in relation to 2018, it will actually be taxed and payment notification made to revenue based on when the actual payment is being made to the director in 2019.
Okay. So this is a question. How is right to access under GDPR resolved in PAYE Modernisation?
Right to access.
Yeah. Laura, do you want to come in?
Depends on who's requesting the access. If an employee is requesting the access,
Doesn't say, it just says how is right to access under GDPR resolved in PAYE Modernisation.
I don't know if the two would be really interlinked. You have your payroll records for an employee, and if they request access to that, it's the pay. You either run a report from your payroll, or you have access to pay slips and whatever other information is held. I don't know how it would cross over with PAYE.
So the next question then, is it up to the employer to accept the returns or the bureau preparing the payroll? That'll probably come down to the agreement that's in place, will it? Between the employer and the agent? Yeah. I guess at the end of the day, the employer is ultimately.
But I mean, that again depends on what levels of control and access the bureau or the agent has.
Yeah. Again, whatever you agree with your client.
The way the way that the bureau or the client is informed of the amount outstanding, I know they'll be able to see it from the payroll anyway, but the way they'll be able to see what revenue says is outstanding, is that just like it comes into their inbox, is it?
Yeah.
So they actually log in
Inbox.
and see that. Okay. So I imagine in a lot of cases they probably just accept, or it'll just be deemed to be accepted, in that they won't need to go in, and the payment will probably be made by variable direct debit probably.
Yes. Yeah.
It probably actually be a little bit similar to how the RCT tax is operating at the moment, in the same way that you make a number of payment notifications to subcontractors on a weekly or monthly basis, and then at the end of the month, effectively the amount that's due gets accepted as being the return, so it'll probably be similar to that.
Okay. There's just another question there in relation to payments and submissions. I suppose, just to be clear, there's a submission for every time you pay your employees, but the current payment arrangement that you have with revenue, be it monthly, quarterly, will not change. So it's just the sending of that payroll information to revenue. How will directors' fees voted after the year be dealt with?
I think we just covered that off from the last
Sorry,
question.
It's kind of a repeat. How does the employer authorise the payment to revenue? So I think we've covered that really, that you either log in and accept it, or it's deemed to be...
And I mean, at any point, there is the option to go on and make a payment, and that payment screen is available anyway. So,
but if, for example, they set up a flexible direct debit,
Exactly.
you're going to take it anyway, whether they go in and authorise it or not. Yeah. Do you have a sample of data processing agreement, contract agreement one could use as a single payroll provider?
Yes, that's the template document that we're going to provide.
Yeah.
It's going to be in the handout.
So it's in the handout that everyone will
That's
receive.
the addendum to their existing.
They should have an
engagement
existing agreement in place.
there.
Will agents have access to my account through Ross for clients who are in PAYE employment? No.
An individual
they're not
employee.
going to have the access to the individual employees.
No, not the individual employees, but you do have access to your own clients. So if you're acting for a director, you would have access to those. Yeah.
If an employee hasn't registered with my account by the end of the week, does this employee not get paid, or is emergency tax applied? So I suppose not registering for my account is not going to impact on your payment issued by your employer. It just means you can't log in to see what your employer has submitted on your behalf.
The tax credits will still issue.
Through the RPN,
Which may be on emergency or maybe on zero credits and zero cut-off, dependent on the information revenue have on file.
Okay, is there an interest penalty from revenue if corrections are made before the final statement from revenue is accepted?
My understanding is no.
No, there wouldn't be. And the penalty regime has yet to be tied down, because obviously there will be a period of leniency while the system is bedding in. So, but not before the actual statement has been accepted. No.
Can we get that in writing?
No, not from me.
This is being recorded.
Well, there will be a period of leniency, but that has to be agreed, because obviously there is going to be some bedding down with the system, and we do expect corrections and errors, etc. So there will be a period, but,
especially with the overlap of the first
between the two.
Okay. So just a question there, will you still be able to do a net to gross calculation? So it's not something any of us would promote, but revenue won't even see that it's a net to gross, you just see the gross and the relevant deductions. Small employer, 1-2 employees, currently processed by accountant monthly. How will revenue communicate that payroll is behind or returns are due to be filed?
Revenue, well, I suppose the only way that would happen is under the revenue compliance program. But obviously the obligation is on, if you are the agent acting on behalf of the employer to ensure that the returns are being prepared and being submitted. The payroll notifications are being made, or for the employer to take that responsibility, whichever is the case. Again, this is why new procedures will need to be put in place.
Will revenue be carrying out workshops or seminars on this like they did for the RCT changes?
Yeah, well, what we're proposing is to have seminars in September, October, regionally based seminars, and we hope to have PCs set up in the rooms as well to actually allow people to demo, and we will certainly demo the system as well. So that's the proposal at the moment anyway.
Okay. If you have a client who has 2 employees who get the same wage each week, can you do multiple payrolls in advance, for example, run 4 weeks in one go?
Yes.
So absolutely.
Yeah. You just have to make sure it's in advance and not in arrears.
Yeah, on or before. Okay. How will the following be facilitated? Weekly and monthly payroll processed by 2 different staff due to confidentiality. Can the processors have separate logins to revenue and limited access to employee details applicable to their payroll tasks?
No, because if it's under the same prem registration, the statement is going to show the entire liability for that statement. But maybe what they might suggest is setting up a different prem reg if it's an exec payroll or something that they don't want the payroll staff to see.
Okay. Can the employer access the statement of earnings on behalf of the employee through Ross?
No.
So it has to be done through my account, I suppose, when an employee gets...
And it's the individual access.
Yeah.
Good question though, I mean, because I'd say a lot of employees will probably expect the employer to be giving that
No, I
statement.
suppose so. The only thing that they will be able to access is whatever is in their payroll system, not what's on this.
Yeah, so there'll be no individual statements in an employer's Ross account.
Because of the other information
Because
obviously in there that the
exactly,
employer shouldn't
and
have
you know,
access to.
the employee could have other employment or other income that the employer has no need to know. So that wouldn't be possible.
A question then, will revenue share real-time data with the Department of Social Protection?
Yes, we already have a revenue and DASP data sharing agreement, and that will continue. So the real-time data will be fed across to the DASP, particularly in respect of illness benefit, and there'll be a similar feed from them.
Okay. At the moment we have clients with new employees who are not included on the P2C, even though we have registered their employment with revenue. We have been advised the reason for this is that the employee has not registered with my account. Is this correct? It seems to contradict what you said earlier. So that couldn't be the reason.
It should only happen if the person has never been employed before and they haven't registered with revenue themselves. So if they've never worked in the state before,
Or
then
first employment.
First employment ever.
The obligation is with the employee to register, and then really what you should be getting back is a nil P2C if the person hasn't registered. But that should only be the only reason, and then obviously taxing at emergency with nil credits.
Okay. How will the new system deal? How will the new system deal with someone with a variable gross pay, i.e., some months the gross pay will be nil? Will a submission have to be made each month?
Only if a payment is actually being made.
Yeah, there'll be no late submission if the submission would have contained zeros anyway.
Again, it's follow the money based on when the payments are actually made. So if somebody is not getting a payment this particular month, so be it. That's fine.
Okay. Employer has no employees but has opted to retain registration and file nil P30s in the event employees commence at a later date. What do we do now monthly? Is a nil return possible?
Do you want to answer? We've discussed this already ourselves.
Yeah, I suppose just obviously through the Irish Tax Institute, I was at a TALC collections meeting there recently, and I was actually astounded by the amount, the number of nil P35s that have been filed for 2017 and the statistics in relation to that. I suppose as an accountancy practice and payroll bureau provider, then decided just to take a look at our own client base and the number of P35s that we submit, and of those, if there was a number of them that are nil returns, which obviously involves a body of work. While it doesn't take very long to do a nil return and submit it, you know, just 15, 20 minutes here and there, all add up. So what we've actually done is we've done a review of any clients who have had nil P35s for 2017 to see whether or not we think that they will have employment in 2018, and if not, we've actually made the decision to deregister them. To re-register an employer, it only takes about 48 hours, and there's not a huge amount more work involved in that. So if it's unlikely that they're going to employ anybody in 2018 or for the foreseeable future, I'd recommend that you deregister those employers, which obviously will cut down on the amount of work that you will have come the first 2 months of 2019. In relation to the second part of the question, if you have somebody who's registered and not actually making any payroll notifications, I don't think that there would be any.
There's no.
You don't physically then have to go in and file like a monthly statement.
No,
you don't.
No.
So again, it can be on the assumption that what you filed is actually correct, or if you're not filing, that there's no payments and no liability.
Yeah. I suppose it's different to the UK where you have to let HMRC know that you're not paying staff. Here you will just assume you're not getting anything. There's no payments issued. There's another question on directors. If you feel it's a repeat, just let me know. Sorry, it's jumping on me.
Yeah, basically it's back to when the person is receiving the money, and if they're not receiving it all, then they're only taxed on what they've actually received, and that's what you can put through.
Yes, basically some of it isn't paid until the following tax year. So again, it's when it's paid.
Yeah, that may have, obviously some issues then as well, because if you're not using the tax credits or the cut-off point in a particular tax year,
then
so
it's next year.
Currently new employees are required to register on my account. I see loads of headaches for accountants or payroll bureaus regarding incomplete or late info. How will revenue communicate this to registered employers, particularly smaller ones, trades, etc.?
I'm not really sure.
Yeah, if somebody doesn't register with my account, I suppose they don't have access to what's been submitted on their behalf.
What's going to happen is with the new system, the employer is going to get a nil or PM. So, it's the person that's ultimately going to suffer there because they're going to be taxed on emergency with no credits until they actually sort out their registration. But the fact that they're going to come in now on the payroll will trigger the fact, but if it's a brand new job, first time employment, then that's going to, obviously need the individual to come on and register. But again, that's something that needs to be communicated to all employees. And certainly we have some handy little bookmarks there in relation to my account, and we can arrange for some of those to be sent out. And they're in the public offices as well, just to remind people to register for my account.
Okay, thank you. A question for Paul. Will Thesaurus show a report of outstanding runs requiring submissions for bureau users, i.e. for multiple clients?
Yes. Yeah,
you do have your late payrolls there at the minute, which is a new thing you had in 2018.
Yeah, also, I know at the moment, the way I have developed so far, when you go to the individual employer, it'll show the number of, say, PSOs that are actually outstanding. It'll have a control panel as such.
Yeah.
So I'll put something like that into the bureau dashboard as well. Yeah.
So there's something, I suppose, to show late payrolls and then also outstanding submissions.
Yes. Good idea.
Just mental note there. Where a client PAYE payment is made from a bureau client account, will there be a facility not to allow the payment until the bank account is in funds? I guess if it's set up as a direct debit, you're going to apply for it, and there'll be nothing to ask you not to.
A failed direct debit or whatever.
Would it automatically be represented, say, within a few days? Or?
That I'm not sure of. That would be something that the Collector Generals would be tying down, but we can certainly look at it and make sure that it's included. But I think at the moment, generally, they do represent,
Do they? Okay.
Yeah. I think for VAT they do anyway, so.
Okay. We're nearly there. Just the person that asked about being able to, I suppose, limit access within Ross, for the split payroll, if you like. She just wants to know what's the process to get a second employer PAYE reg number.
It's the same, basically. It's the same process.
So approximately 48 hours.
Yeah, it's the same process, yeah.
Okay.
I wasn't aware of that. So this a limited company can have a number of different
PAYE registrations.
Okay.
Yeah.
Well, that's handy.
But he's interested.
I'm just thinking for the multiple employment, so that, that when you have the branches and such like.
Yeah, that's more with different shops, but they don't seem to want to have different numbers. But it'll cause an issue with your submission that you want this year for the alignment.
Yes.
sorry, so we've been around me there. And in relation to family wages for a farm situation whereby payment may only be made at the year end, how does this work? So again, it's just whenever the payment is made.
Whenever the payment is made, yeah.
Okay.
And obviously in that situation, if you're making the payment at the end of the year and the family, the person hasn't had any other employment, obviously they would have a build-up of the tax credits on the cut-off point. So you're notifying revenue in week 50 that you're making a payment to that particular member, maybe after the grain has come in. Then revenue, the RPN that will come back, will have the accumulated tax credits to that particular week number.
Okay. So just the last question. In the event of variable gross payments, will the new system accept negative amounts for PAYE USD due to the variable nature? So, I mean, it does at the moment, and it still will.
And we've built in
there will be
negatives as well, acceptable on the system.
Yeah, there will be refunds. That's all the questions. Thank you.
Thank you.
Okay, thank you for joining us
Thanks
today.
very much.
And thank you everyone. And thank you, Rachel, for keeping things going. So just to mention again, the next major webinar for bureaus is the 1st of May, which is on GDPR, which I think will be very timely because that's due to kick in the 25th of May, those regulations. So, okay, once again, thank you very much.
Thank you.
Thanks, bye-bye.